Hi, thanks for joining me on my market report. My name is Mike, and my mortgage market report is about mortgage rates. We kind of get into what's impacting mortgage rates on a daily basis, whether it's something from the economic calendar, whether it's sentiment that got changed with the investors, or perhaps it's headline news or geopolitical. We're here to kind of give you the scoop on what's impacting on rates on any given day here. Now, if you're looking to refinance or purchase, this is a great video to follow as you're most likely going to be uh, tracking rates as you want to probably make sure you get the best rate and make sure if you want to not lock in too early or perhaps you want to lock in because the market is deteriorating. Now, something a little bit about myself is I am a loan officer. I do work with a national lender. We're here to help you guys with any facet of the origination. If you guys are looking to refinance or purchase, we'd like to earn your business. So please give us a shout. We'd love to talk to you a little bit more about how we can help you out. Uh, in the meantime, if you got questions about the process, programs that are available out there, or mortgage rates, please feel free to reach out as well. We'd love to be able to talk with you and help you out as much as possible here. So without further ado, why don't we jump right into the market report here today. We'll start off with the economic calendar. I'm going to go with this other calendar here because it gives a little bit more information because I like to give the excluding transportation. So we'll touch on this one for the moment. So here's what we got here. Durable goods orders for the month of September. If you look at the month of August, we had a drop of 1.1%, but however, that got revised higher to 1.8. I'm sorry, excuse me. Let me repeat that. It was at 1.8% in the month of August, and forecast was calling for a drop of 1.1%. Excuse me there. And then came in at minus 0.4%. Now, transportation creates these big ticket items and sometimes can skew the numbers, and you'll see why here. Now, it came in at 0.3% back in August, forecast calling for 0.4%, and came in at expectations. So when you take out those big ticket items, this is what you get. This is really kind of the better. It's kind of like your core PCE or your core inflation. You take out these volatile numbers that can really kind of mess up the numbers because you got large numbers that they can really kind of bring things down or up. And this kind of gives a little bit more of a stable or more of a um, more of a stable different number than you can work with as a basis. Now, also something we don't really get into, but we kind of like to look at is the weekly MBA report that comes on mortgage loan activity report, and kind of lets us know if refinances or purchases are up or down. And as we can see here, the purchase transactions increased last week, which is good news. And then we also see refinances drop as a result. So let's go back here to the chart here, and we'll take a look here at the mortgage-backed securities and see what's going on over here. Some headline news we'll kind of touch on a little bit was investors kind of look at Q3 report earnings reports. They're kind of disregarding the higher inflation data that's coming out. We'll see the big one this Friday, which is the PCE, which is the Fed's favorite gauge for inflation. Uh, but another item that came into to note is the FCC kind of basically kicked out China Telecom. They view them as a security threat, and basically that's creating a little bit more tensions between Washington and Beijing. And of course, we'll have to kind of wait out to see how that plays out. So without further ado, let's get back to this mortgage-backed securities. Yesterday we closed up 9 basis points, so it helped us out. When we did this report, we were actually down about 3 to 5 basis points, so we ended up closing upwards. Some lenders also did some price improvements. As you see here, we're getting some more price improvements. We're up about 25 basis points and coming up to the 25-day moving average. So that's kind of helping us out here. So we will find a better pricing today in terms of mortgage rates, which is obviously good news for that. Now, we did have some early volatility today, right here. This was because of a statement brought upon by the, brought upon by the Bank of Canada. It basically said that they're moving from their QE into the reinvestment phase. It will now purchase Canada government bonds solely to replace maturing bonds. So, what does that mean? Basically, that they're as cold turkey, they're just basically dropping QE as a result, stopping their tapering as a result, and nothing else. It's not like a phase out. It's just cold turkey. They're dropping it. So that's kind of what that means there. Sorry about that. My throat's getting a little bit of a tickle here. Um, so, anyways, we got good news there, and then even other great news is that we're seeing a drop here, and this is touching the 25-day moving average of the yields. Yields is down to just 1.54. This was after touching up about 1.7, our way up here, just earlier, late last week. So good news that we're kind of seeing a drop now on yields as well, which is adding less pressure on mortgage-backed securities. And last but not least, we'll touch on what's going on with mortgage rates on a national level. So 15-year fix right now is at 2.62, and then we got the 30-year fix at 3.25%. So again, these are kind of a national average, mostly on the conforming level. We get there. A lot of times they will include points in there, so if you get quoted with points, you know why. But again, these are now kind of just a general national average, what's out there available. All right, folks. Again, if you guys like these videos, please smash that like button. We greatly appreciate it. You can help out our channel and follow us. If you guys got questions about anything, please reach out. We'd love to be able to talk with you guys. You guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.